Dr. Feldstein, thank you very much for joining us.
Good to be with you.
Well, the big discussion now is really the bank bailout plan. Mm-hmm. It will, of course, change the way banks will look in the United States. But before we come to that, do you think this plan of private-public partnership to buy out toxic assets is really the final one that will succeed? Do you think the U.S. administration has cracked it?
I think it's better than the previous plans. It's not clear that it's going to work. It's not clear that it's big enough, but I think it has a lot of clever elements in it that I think can give it a chance to work. And if it doesn't work, for some reasons, it may be that it just needs to be scaled up even larger than it is now. So we'll see whether, in fact, the banks are willing to sell assets to the public-private partnership, and if so, whether there's enough that they are prepared to sell.
There will be a process of trying to discover a price for a lot of the assets which have so far remained illiquid. Is there a fear that this will throw up insolvency or insolvent banks, and that might be a problem?
It certainly is a problem. It's a potential problem anyway. That for the banks, for the mortgage-backed securities, it's not a problem. But for the mortgages themselves, they are carried, in general, they are carried on the balance sheets of the banks at their full value. When they go to sell them, they will sell them for 70 cents, 50 cents on the dollar, and that will have to be written down immediately. But at the same time, the government may come along and inject additional capital in the form of preferred shares, and so that we will not see insolvencies resulting from this.
Do you think the next big problem could be insurance companies? I mean, even if we solved the banking issue in the United States, will there be more skeletons tumbling out of insurance companies?
Well, there may be some. I mean, some of the insurance companies have been, in effect, acting like banks. They've not been providing life insurance or property insurance, but they have been taking deposits, investing them in risky ways, offering variable annuity policies with guarantees. And so some of those policies may come back to haunt those companies.
There isn't an estimate now with you that about how much the U.S. May have to spend by way of fiscal spending to bolster financial institutions. Is there a number in your mind?
No, but this $1 trillion that Secretary Geithner has spoken about may not be enough. It depends on how it's being done. If they have to buy up the entire mortgage or the entire mortgage-backed security, that's going to be a lot more expensive than going inside the bank, inside the portfolio, and fixing those securities. So I think it might be a much more cost-effective way of doing it to work with the banks to fix these impaired securities rather than buying up, through the public-private partnership, buying up the entire impaired security.
Well, speaking of fixing up, lately we have been seeing some kind of positive economic data. I guess the base effect would be at least to some extent responsible. But does it give you a feeling that maybe the economy's worst is somewhere close to ending?
I wish it were so. The rate of decline of the economy may be slowing, but that's different from saying that it's turned around and is rising. So we had a decline of more than 6% annual rate of GDP in the fourth quarter. Looks like the quarter that's just ending, the first quarter, will turn out to be 5+% annualized rate of decline. Well, it doesn't have to keep going down at that rate for us to nevertheless be sliding into a weaker and weaker position, a position in which the unemployment rate is rising and personal incomes are falling. So I'm not counting on a turnaround anytime soon.
When are you counting on a turnaround?
I'm not.
Okay.
I'm not. What I would say is that a turnaround in 2009 looks very unlikely. 2010, I think one can have a a plausible hope, but that's different from saying that there's clear, concrete evidence, something that you can have confidence in, that the economy will be back and expanding at this time next year.